What is up guys, my name is Ignas, welcome back to the channel. Colin Langan, the auto analyst from Wells Fargo, was invited on CNBC to discuss the growth and competition prospects for the electric vehicle space. He was praising the US automakers like Ford or Tesla, but the last bit of the interview caught my attention the most. Colin discusses regions where EVs will likely see the most growth. This is his take.
I think you need China. It's a question of how much they could grow there. I think the brand is still very, very strong there, but it's something to constantly watch. The headlines over there have been a bit negative for them. They've gotten some bad press. Recalls, never help for any auto company. Doesn't seem like investors don't seem too concerned today about it. But China is an extremely important market for them. It's really the hub of where EVs are going to see the biggest growth, and so you want to have a strong position there because then that gives you scale for the rest of the world. Because really, if you go around the world, it's going to be China, Europe, and then the US really is lagging far behind. So China is a pretty important EV market for sure.
So China and even Europe are considered better markets for the EV demand. But then the question is, why should we take a US automaker that is just stepping foot in these markets? Maybe in China's case we could pick a local EV manufacturer instead. So for today's stock comparison, I have picked 3 EV automakers from China. The names are NIO, ticker symbol NIO, XPeng, XPEV, and Li Auto, ticker LI. In order to make the comparison possible, we will be looking into 8 different factors. Last 4 quarterly earnings results, annual revenue growth, analysts' price targets, forward price to earnings ratio, price to sales ratio, return on equity, cash per share, and current ratio. The best company under each factor will get a point, so it is possible to have from 0 to 8 points. And in the end, the stock with the most points will be considered the winner of this comparison. I hope that the rules were clear, so let's begin. The first factor will be the last 4 quarterly earnings results. When a company reports earnings, they are compared to expectations of analysts. So earnings can either beat expectations, meet them, or miss them. We will consider that beating expectations is a +1, meeting +0.5, and missing 0. Then we sum the results up to a minimum of 0 and a maximum of 4, and in the end the stock with the highest sum gets a point for this factor. So here we have quarterly earnings for NIO, and Q3 of 2020 beat expectations, Q4 missed, Q1 of 2021 missed expectations, and Q2 beat. So with 2 beats and 2 misses in quarterly earnings, we get a sum of 2. Quarterly earnings for XPeng, and Q3 of 2020 missed expectations, Q4 missed, Q1 of 2021 beat expectations, and Q2 missed. So with 1 beat and 3 misses in quarterly earnings, we get a sum of 1. Quarterly earnings for Li Auto, and Q3 of 2020 missed expectations, Q4 beat, Q1 of 2021 missed expectations, and Q2 missed. So with 1 beat and 3 misses in quarterly earnings, we get a sum of 1. Results for the last 4 quarterly earnings factor are in the table, and with a sum of 2, NIO gets the first point. Second factor will be the annual revenue growth. As investors, we want to find that the revenues of a company are on a steady increase. We will take a look into the results of a few most recent years and compare them one by one. If revenue was on the increase from one year to the next, we will consider it as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, and in the end, the stock with the highest sum gets a point for this factor. So these are annual revenues for NIO, and revenue started in 2018. So going into 2019, there was an increase in revenues to 7.82 billion Chinese yuan. And then into 2020, there was another increase to 16.26 billion yuan. So with 2 increases in annual revenues, we get a sum of 2. For XPeng, we have revenue in 2018. So going to 2019, we had an increase to 2.32 billion Chinese yuan. And into 2020, there was another increase to 5.82 billion yuan. So with 2 increases in annual revenues, we get a sum of 2. Annual revenues for Li Auto, and we have first revenues in 2019, and then going into 2020 there was an increase to 9.46 billion Chinese yuan. So with 1 increase in annual revenues, we get a sum of 1. Results for the annual revenue growth factor are in the table, and with sums of 2, both NIO and XPeng each gets a point. Third factor we'll have are the analysts' price targets. As potential investors, we want to check how far the current share price is away from the analyst's price targets. If the current price is under the average target, we will consider the stock as undervalued, and in the end, the company with share prices furthest away from the average analyst target to the lower side gets a point for this factor. So for NIO, we have 19 price targets of analysts, They range from the lows of 19 to the highs of $91 per share. The average is at $59.98, and the current share price is at $38.09. This means that there is around 57.5% room for the current price to reach the average target of analysts. For XPeng, we have 16 price targets of analysts. They range from the lows of 39 to the highs of $71 per share. The average is at $53.36, and the current share price is at $38.73. So there is still around 37.8% room for the current price to reach the average target of analysts. For Lyoto, we have 16 price targets of analysts. They range from the lows of 23 to the highs of $61 per share. The average is at $41.21, and the current share price is at $29.73. This means that there is still around 38.6% room for the current price to reach the average target of analysts. Results for the analysts' price targets factor are in the table, and with most room for growth, NIO gets the second point. Factor number 4 is the forward price-to-earnings ratio. It is calculated by taking the current share price and dividing it by the estimated future earnings per share. It is the standard price-to-earnings calculation with the difference that earnings here are predicted by analysts. So in the end, the stock with the lowest but positive price to earnings gets a point for this factor. So for NIO, we have the forward price to earnings at minus 380.85. For XPeng, the forward price to earnings is at minus 92.04. And Lyoto is the only one with positive earnings at 297.3. Forward price to earnings ratios are in the table, and with the only positive value, Lyoto gets the second point. Next factor is the price to sales ratio. The formula here suggests to be looking for a company with a low market cap and a high result in sales. So in the end, the stock with the lowest price to sales ratio gets a point for this factor. NIO has a price to sales at 2.26. Price to sales for XPeng is 2.93, and Lyoto has a price to sales at 2.04. Price to sales ratios are in the table, and with the lowest value, Lyoto gets another point. Sixth factor is the return on equity. The percentage here shows how well the company is managed and if money from investors are efficiently handled. So in the end, the stock with the highest return on equity percentage gets a point for this factor. NIO has a return on equity at minus 53.78%. Return on equity for XPeng is at minus 22.39%. And for Lyoto, the return on equity is currently not available. Return on equity percentages are in the table, and with the highest value, XPeng gets the second point. The next factor is the cash per share. The ratio suggests the company's ability to reinvest and expand, or potentially to buy back its own shares. So in the end, the stock with the highest cash per share ratio gets a point for this factor. For NIO, we have the cash per share at 42.17. Cash per share for XPeng is at 37.04, and Lyoto has a cash per share at 38.45. Cash per share ratios are in the table, and with the highest value, NIO gets another point. The last factor we will take a look into today is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As investors, we want to check if the company is able to cover its debts with assets, but also if they are actually being leveraged. So in the end, the stock with the highest current ratio under 3 gets a point for this factor. NIO has a current ratio at 2.48. Current ratio for XPeng is 3.87, and Lyoto has the current ratio at 5.17. Current ratios are in the table, and with the highest value under 3, NIO gets one more point. We can calculate the results, so NIO has 5 points, XPeng 2, and Lyoto also 2. This means that with 5 points, NIO is considered the winner of this comparison. And that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. Now there is a question for you, are you buying into any of the China's EV names? Share your best picks in a comment below. If you are interested to know exactly when I buy or sell any stock, then consider memberships. By becoming a member, you will get access to Discord, where I share my stock watchlist and all the buys and sells that I'm doing. This could be a great option to track my moves closely. Last week we had a stock comparison on 3 large aerospace and defense names, and there was also an update for our technical analysis and the Toro stock trading portfolio. If you are interested in any of these, then click on a video currently on the screen. And that was it from my side, thank you for watching, and I will be seeing y'all in the next one.